Gigantic Fed confusion. Evaluating the Federal Reserve's rate hike pause. Segment 1. The Fed's evaluation process. 1. The Fed's decision to pause indicates a desire to evaluate the impact of previous rate rises. 2. By taking a step back from aggressive monetary tightening, the Fed aims to alleviate strain on the economy. Segment 2. Hawkish signals and the dot plot. 1. Despite the pause, the dot plot reveals that many FOMC members anticipate at least 2 more rate increases this year. 2. This contrast between the decision to pause and the hawkish estimates raises questions about the Fed's intentions. Segment 3. Median forecast and disconnect. 1. The median forecast for year-end interest rates is higher than previous projections, suggesting a potential 50 bps per second increase. 2. This disparity between the pause and the forecast highlights a possible disconnect in the Fed's strategy. Segment 4. Ambitious intentions versus current cycle. 1. The Fed's pause may indicate more ambitious intentions than what it expects to fulfill. 2. It's possible that we are nearing the peak of the current hiking cycle, leading to a cautious approach. Segment 5. Inflation indicators. 1. Examining previous stagflationary periods, we observe that the Producer Price Index, PPI, tends to lead Core Consumer Price Index, CPI, down. 2. With the recent inflection point of PPI crossing below core CPI, there's potential for the Fed's preferred measure of inflation, Core Personal Consumption Expenditures, PCE, to respond accordingly. Segment 6. Chair Powell's objective. 1. Fed Chair Powell has emphasized the importance of seeing inflation moving down decisively. 2. If core PCE responds to the current inflection point, it may align with Chair Powell's goal. Segment 7. Weighing the pause and forecasts. 1. The impact of the pause on inflation may carry more weight than the dot plot forecasts. 2. The Fed's priority seems to be addressing inflation concerns before committing to further rate hikes. Segment 8. Potential economic impact. 1. Analyze the potential economic impact of the rate hike pause and the Fed's evaluation process. 2. Discuss how this decision may affect consumer borrowing, business investments, and overall economic growth. Segment 9. Market reactions. 1. Explore the reactions of financial markets to the Fed's announcement. 2. Discuss the potential implications for stock markets, bond yields, and other asset classes. Segment 10. Investor strategies. 1. Provide insights into potential investment strategies in light of the Fed's decision. 2. Discuss how investors can navigate the uncertainty and position themselves for potential opportunities. Segment 11. Global perspective. 1. Examine the potential implications of the Fed's decision on international markets and economies. 2. Discuss how other central banks might respond and the global interconnections of monetary policy. Segment 12. Expert opinions. 1. Present perspectives and opinions from renowned economists or market analysts regarding the Fed's rate hike pause. 2. Share diverse viewpoints to offer a comprehensive understanding of the situation. Segment 13. Historical context. 1. Provide a historical context by discussing previous instances when the Fed paused rate hikes during economic cycles. 2. Explore the outcomes and lessons learned from those periods. Segment 14. Future scenarios. 1. Present different scenarios for the future trajectory of interest rates based on various economic factors. 2. Discuss the potential implications of these scenarios on inflation, employment, and overall monetary policy. Segment 15. Risks and uncertainties. 1. Highlight the risks and uncertainties associated with the Fed's decision and the evolving economic landscape. 2. Discuss factors that could potentially disrupt or influence the Fed's plans. Segment 16. Investor education. 1. Offer practical tips and strategies for individual investors to navigate the changing monetary policy landscape. 2. Provide guidance on diversification, risk management, and staying informed about economic developments. Segment 17. Policy implications. 1. Discuss the potential implications of the Fed's decision on government policies, fiscal stimulus, and regulatory measures. 2. Explore how policymakers might respond to the evolving economic conditions. Segment 18. Impact on interest rates and borrowing costs. 1. Discuss the potential impact of the Fed's decision on interest rates and borrowing costs for individuals, businesses, and the housing market. 2. Explore how changes in interest rates can affect mortgage rates, auto loans, credit card rates, and other borrowing costs. Segment 19. Inflationary Pressures. 1. Analyze the factors contributing to inflationary pressures and how the Fed's decision to pause rate hikes may impact inflation dynamics. 2. Discuss the potential risks of inflation and its implications for consumers, businesses, and the overall economy. Segment 20. Employment and labor market. 1. Explore the relationship between the Fed's decision and the labor market. 2. Discuss how changes in interest rates can influence job growth, wages, and employment trends. Segment 21. Monetary policy tools. 1. Explain the various tools and mechanisms the Fed uses to implement monetary policy. 2. Discuss how the Fed's decision to pause rate hikes might impact other monetary policy tools such as quantitative easing or forward guidance. Segment 22. Government debt and fiscal policy. 1. Examine the potential implications of the Fed's decision on government debt and fiscal policy. 2. Discuss how changes in interest rates can affect government borrowing costs and the sustainability of fiscal measures. Segment 23. International trade and exchange rates. 1. Discuss the potential impact of the Fed's decision on international trade dynamics and exchange rates. 2. Explore how changes in interest rates can influence currency valuations and global competitiveness. Segment 24. Financial stability and systemic risks. 1. Analyze the potential implications of the Fed's decision on financial stability and systemic risks. 2. Discuss how changes in interest rates can impact asset valuations, market volatility, and the resilience of the financial system. Segment 25. Sentiment and investor confidence. 1. Discuss the potential effects of the Fed's decision on investor sentiment and confidence in the market. 2. Explore how changes in interest rates can influence market psychology and investor behavior. Segment 26. Conclusion and key takeaways. 3. The Federal Reserve's decision to pause rate hikes has created confusion and speculation about its future actions. 5. Thank you for watching our video, and we hope this analysis sheds light on the gigantic Fed confusion and its potential implications.